They were both raised by single moms. One of them one raised 4 children, one raised 5 children. Very modest means, just basic all-American family. Modest means nothing extravagant, so just a normal home, single family mom raising them. So this particular couple decided, they saw the moms that owned their homes. So both of their moms owned their homes, and they saw within their family home ownership. And so when they got married, they knew they'd have to wait a year. They rented an apartment for the first year. And then as soon as that year ended, they just knew they were going to buy a home. It was just automatic. Just, that this is what happens when you're married, is you buy a home. They purchased that home, and then they got the idea to buy an investment property. So within the first couple of years of being married, they bought a duplex. And then you all know how it is. Once you buy something, you see that it's easy to do, you keep doing it over and over. Is that right? And so that you say, I know how to do this. And so they bought another property, and then another property, and another property. And fast forward maybe 20-something years later, they decided to do a financial worksheet to look at where they were financially, because they were going to make their projections for the rest of their business life, because that was the business, real estate investment. So they did their financial worksheet, and they did the calculations, and you see what your assets were, you see what your debts were, and so you have a feel for what you're actually worth. So by the time they did the worksheet, had a lot of real estate of the properties over the years, they were being rented. The tenants had paid them off. So the tenants with the rent payments were making the mortgage payments. The properties got paid off, and he was paying extra on some of the mortgages, saying, I really need to get these paid off. I need to have this done. I need these properties paid off and debt free. So fast forward to they're working on the balance sheet, their financial worksheet, and they get to the very bottom. And the very bottom says that you have $2 million worth of paid off real estate. You have $2 million worth of assets. It's a big deal, right? That is my story. And so my husband and I, well, thank you. Thank you. And I tell it that way just to say that just a regular, everyday person, all it takes is starting with one property, the property that we owned. And when we moved out of it, we rented it out. That was really our first investment property. And then we bought more after that. But my point is that anyone can do it. If Stacey and Dwayne can do it, anyone can do it. And so we're going to talk today about getting your clients set up for that first property that starts the snowball. And what I'd like agents to do is to be very intentional about telling them the story. Here's what can happen. And not just selling them a home and then moving on, but telling them maybe this may be the first one. And then we want them to consider to buying more real estate as an investment, as a retirement strategy. My husband was able to retire from his job 4 years ago because we had all of this property and we had the income coming in. And of course the income from the property is more than his retirement from the city of Kansas City. And so my name is Stacey Johnson Cosby, and I'm a real estate agent in Kansas City, Missouri. Our metropolitan area encompasses Kansas and Missouri. So I'm licensed in both states. And I've been licensed for 35 long years. As a matter of fact, I got my license before I got my degree because my twin sister here, Tracy, decided that she wanted to go get her real estate license. It's like, okay, and I'm following her. And I got my license, and of course she ended up leaving real estate, and she now does safety training. You may know Tracy, the safety lady. She does real estate safety, personal safety training. And so I followed her into the business. And so I've been here for a long time, and I'm going to be here for a long time more. My husband tells me that I cannot retire. And if you find that you do very well with your clients, that you don't want to retire, because it's a service that we do. At this time, I'd like to have my fellow speakers introduce themselves briefly, and you're going to hear from them in a little bit. Will you start, Caroline?
So my name is, thank you, Stacey, by the way, and I also want to thank you for the opportunity to, sit here in this panel with you guys, because this is a topic that is very near and dear to my heart. I am an Afro-Latina. I moved to this country 12 years ago, and from a very young age, my father instilled in me the importance of building generational wealth through home ownership, right? So 12 years after I moved here to the United States, I have 2 African-American daughters. And actually my oldest daughter, she's an active realtor in Atlanta.
Very good.
And she's paying for her law degree, serving clients, buying and selling homes in the city. So it's definitely something that is, it's critical. It's important to be able to pass on the message. And one of the things that I've learned in this past couple of days here, talking to different realtors and everything, is like they say, hey, take advantage of making sure that education, know the resources, know the strategies. So I am part of New American Funding. We are the largest Latina-owned mortgage company in the United States. And for us, it is critical to be able to, not only serve minorities. Actually, in 2021, New American Funding's percentage rate of lending to Black borrowers, of purchase lending, was 60% over the industry average.
Wow.
Right?
So you're very intentional about doing that.
Very intentional. But I think that the most important thing, I think that for me, is that New American Funding makes sure that we mirror the communities that we serve. I think that that is the key. So.
Okay. And I thank you for being here. And in a minute, you'll hear why she's here. She's going to talk about the move-up buyer, your clients that already own a home, how to get them to the next level. And then the person who's going to talk about first-time home buyers is a lender from U.S. Bank. Scott, if you can please introduce yourself.
Thank you. Good morning, everybody. My name is Scott Willis. I'm with the National Strategic Markets and Affordable Lending team at U.S. Bank. I physically sit in the Washington, D.C. area, and the charge of our team is to drive the bank's cross-channel strategy to accelerate wealth outcomes for first-time home buyers, low to moderate income, and multicultural consumer segments by expanding access to home ownership. Is really that simple. As far as are we going to have the presentation? Is it going to?
We are. This is now, yes,
Okay.
we will, but this is just the introduction so they know who's talking to them this morning.
So I agree. I guess I can, I would tell you this. I was born in, now I'm telling my age, in August of 1967.
Woo.
And come on now.
Hey, I'm just a little older than them, so I can say that. You're doing the math?
I am.
All right.
But kind of my journey, part of my journey story is in October of 67, my mother and father both bought their first big home purchase. And I just remember, again, I have an older sister, so she has a different experience than I do. But I just remember, growing up in a home, being a part of a community of homeowners as well. Actually, the community I grew up in was a predominantly Black community of homers in a town called Worthington, Ohio. It's about 25 minutes north of Columbus. But again, it formatively shaped my view of why homeownership is important. And it had a part to do with why I'm so passionate about the work and passionate about what we do at U.S. Bank. Of course, I'm a homeowner now, but again, thinking about that formative period in my life where I saw my family move into homeownership and how it impacted me is something I'll always remember.
Mm-hmm. And I think that's a big deal too, because that's how I feel. And then I got to see this expanded to the next generation. My husband and I, we don't have children. We have wonderful nieces and nephews, great nieces and nephews. And that is good enough. And they see us with our houses. They see us taking care of our rental properties. They hear us talking about it all the time. And I had a moment of pride a few years ago. There was a down payment assistance program that allowed my niece and my nephew to buy a home. It was announced. It was a $15,000 down payment assistance program. And so all the rest, they see us, we model home ownership. We all own our homes. And so they took immediate advantage of that. They both bought homes. So two siblings, they both bought a home using the down payment assistance program. But for that program, they would not have purchased their homes at that time. And so they purchased the home. And in the over the last few years, you know how the prices, what happened with the prices over the last few years, they were up, up, up. My niece started looking around. She said, Aunt Stacey, I see the prices are really high. I think I want to sell my home and see what I can get for it. And so we put her home on the market, and she actually, in 28, 29 years old, sold her home, put $52,000 in the bank. How does that happen? Where else does that happen where someone can just put that big of a chunk of money in the bank? She lived in the house. So she got use out of the house, and she sees it as an asset. So now we're looking for her to buy investment property. So she's looking around at properties, and now she's going to do what Aunt Stacey and Uncle Wayne does. Is that like a moment of pride or what? And so she's doing that. And our other nieces and nephews, they all talk about it. We're going to buy investment properties. And the beauty for them, and we're going to talk just a little bit about how we preserve our wealth and protect our investment so that we can pass it along to the next generation. What we did is, my husband and I, we did our estate planning, because we have these houses, this property all over the place. And if we pass away, let's say we got killed in a car crash, at the same time, then what? than our family. And this happens in a lot of families. Your family's left stuck trying to figure out how do we take care of, what do we do? Where's the houses? Who do we call? Is there a mortgage due? What is going on with our estate and our assets? So we made it easy. We went to an estate planner, we got our estate plan done, and we named a niece and a nephew on each side. We picked one on each side of the family that we thought would be responsible and put them in charge of being our co-executors of our estate. And so imagine the responsibility that they feel with the responsibility of taking care of our business. This is a real estate business that's now going to be passed along to them, and they're the caretakers for the next generation. So we've got 2 generations covered with our great nieces and nephews and our nieces and nephews. So we've covered that, and they see us doing that, and they know that that's the family business. And my husband had kind of an aha moment when we were looking at some stuff happening in New York, where a family during the pandemic, a lot of us weren't getting paid our rent because the government kind of jumped in and said, renters, you don't have to pay your rent. Made me mad. It was unconstitutional. NAR fought the valiant fight, and they got turned over. And so I'm appreciative to our Realtor Association. But during that time, we saw in New York, we saw a particular person that said, we have hundreds of units that have been passed along in our family, and this guy was the current owner. And that made us start to think, that's a generational thing, that our family now knows that they have a real estate, a little mini empire, that is their inheritance. There will not be anyone in my family from this moment forth that is poor. We're using real estate to lift people out of poverty, and we can do that. All of you can do that, and that's what we do in our work. Selling one house changes everything. It can change someone's life. And that's our point today. So we're going to talk about how to make that happen. And then using from these wonderful lenders who've traveled here, and I'm so appreciative of them for their specialties to tell us how to do that in this crazy market that is a little different than our typical normal market. And so I'm going to share with you, if I can. And I'm trying to get our slides. And I see all of the NAR slides. And this is Serge, the wonderful Serge, our audiovisual person. Do you need? Okay. And while he's doing that, I want to share a quote with you that is something that I live by, that as a real estate agent, it's not my job intentionally, but I am lifting people out of poverty. Every time you sell someone a house, in a sense, you're almost guaranteeing them they're not going to be poor again. I give you the example of my niece. And so Thomas Sowell, anybody know Dr. Thomas Sowell? He's an economist. And I want you to look him up at some point, look at his videos. He's 90 years old now, still out there going. And he talks about poverty, and he talks about race. He talks about a lot of things in a different way than you've heard before. But he said that the only way to get rid of poverty is to create wealth. Those who create wealth get rid of poverty. And that's what we do when we sell a home. One home makes a difference. And so here is our panel. And so we all see this, the gap in home ownership between white families and then black families, Asian and Hispanic families. You'll see the numbers on there. And then in the last couple of years, the home ownership rate of black families actually dropped. That is unacceptable. We need to do something about that, and we can. And so there's no excuse for a person not to be able to own a home. When you hear from the lenders, normally the biggest barrier they have are usually financing related. We have 2 experts here who are going to tell us how to overcome some of those issues. And so when we see 44% of black families own homes, 72%, and I think the number is a little bit higher now, of white families that own homes. I'm not happy with the 72%. That needs to be lifted up. We need more families to own homes, but we also do need to close the gap between the black, Hispanic, and Asian families. Let's close the gap. And so we need to do what we can on that bottom end to lift everyone up. So it's not just exclusively black families, but for everyone. We need people to do better. And so NAR just put out a new profile, a new report, and you should find it on their website, where they're talking about the data, where they have the data. The first-time home buyers dropped to an all-time low in the last couple of years. We're down to 26%. Some of the reasons, low inventory, because we know there's not enough housing out there. There are more investors coming into our marketplace able to buy properties. And you have how many of you have seen that, where the cash investors kind of take over, and okay, Caroline has an answer for that. So we're going to have a tool that that buyer is now going to have a way to purchase a home to be able to compete with that cash and institutional investor. And then high rents. We have to charge high rents because our costs are going up. Property taxes, interest rates. And so those are some of the things that are pushing towards first-time home buyers being lower. We need to lift that up. And home equity, the beauty of actually owning a home, and I just pulled some things from the report that I thought were interesting. Over the last 10 years, someone who's owned a home, the average equity that they've made in that property is $210,000. That's almost $250,000 because they owned a home, and with the equity going up. And first-time home buyers who paid all cash, only 3%. We're going to change that hopefully today. And then the average home appreciation over the pandemic is actually over $50,000 a year. So owning a home, remember what happened with my niece. And the share of white and Hispanic buyers grew over the last couple of years, but Black and Asian home buyers got lower by 1% and 2%. Again, not acceptable. We can deliberately target and do something about that. A lot of first-time home buyers, one of the barriers that they face is down payment assistance. They don't have the resources. And so Scott's going to talk about that. How do we overcome the fact that they're struggling? And many people are living, I just heard recently in the news that if you have a $400 emergency, the majority of the people in our country can't cover that. Not acceptable. And so we need to talk to our families and our clients about savings for many reasons. But Scott's going to talk about overcoming that down payment assistance part of it. And then the beautiful thing is at the very bottom that 88% of home buyers, they know that buying a home is a good investment. So there's no question about it. They're already sold. We just need to help get them there because many people don't think they can buy a home or they can own a home. And we know that's not right. And if you find the right lender and you have the right real estate agent, we can change that. They may not be able to buy a home today, but can they buy one in 6 months, a year, maybe even 2 years? Everyone can be set up to buy a home. And I think as real estate agents, it's up to us not just to sell that home at that time, but to tell them to look towards the future and to plan for the future. And so we have to keep in touch with them. How is wealth passed along? Life insurance, real estate is highlighted because that's what I know. And that's what we know. That is our area of expertise, real estate. I don't know stocks and bonds. I don't know about retirement pensions and trust and all that. But people who own businesses, who own real estate, those are things that I know about. And those are things that we can do and encourage our clients to do in order to get that wealth properly passed to the next generation. Some of the barriers, they don't have discipline. And education, this is one thing that Caroline said, they don't understand. They don't know. We need to educate them about what to do, how to protect their assets, and how to pass along their business in a structured way. And youth financial literacy, so many people, young people, are in the poverty mindset. They don't think they can own anything. They don't think they can have a job where they can create anything. We need to change that with young people. We need to start talking to them like my nieces and nephews about home ownership, about the beauty of real estate investments and what that money can do and how it can change their families. We need to talk to them. And then appraisal disparities. I know that that's happened. So that's some of the barriers too, one of the barriers as well. And then we talked about down payment assistance and poor credit. Last year at the conference, Dr. Lawrence Yoon, I didn't get to see him this time, but he mentioned that with the Hispanic and Black families, two of the barriers that they face, lack of down payment and then poor credit. Now, aren't those two things that we can overcome? Yes. If the credit is bad, let's help them get it fixed. Now, you might not buy it today, but 2 or 3 years. Those are two things that we can do to start lifting the bottom towards the top. So those are things we can be intentional about. I want you to hear this video. I'm probably going to stop it, but I want you to hear this. I don't know how to push play. Uh-oh. How can I play this? Would it be up here? And you know what I'll do? If you want to figure that out in a little bit, we'll skip this video and we can come back at the end if we have time.
Okay.
That's okay? Okay, very good. Because there's a history lesson in this video. This is Bob Woodson. I don't know if you all know him, someone else. And I'll have a list at the end of books and people I want you to YouTube and books that I want you to read to learn more, because there's a wealth of information that we don't see in the media nowadays, but it's behind the scenes. So homeowner, how home ownership helps to build wealth. In 2021, the average net worth of a homeowner was $300,000. A renter, $8,000. Let's get some more people into that home ownership category. And then how do you use the wealth from your home? Tax savings, increased deductions at tax time, and the ability to borrow against your equity. And so I tell some of my clients that when they see some of their friends at work making the same money they're making, and they're out sending their kids to college, and they're saying, how are you doing that? Going on fancy vacations, paying off debt, buying stuff. Many times they're using the equity in their home, because that's like a piggy bank. Your home is like a piggy bank. And if you have $50,000 worth of equity, there's money there that you can use for things, to send your kid to college or do whatever you need to do. So we need to look at our home as a piggy bank. But my husband would caution us against borrowing against the property. He likes having stuff paid off, and there's a sense of security in that. But then know that it is an option. And then, of course, when your home value appreciates. 87%, and my lenders may have different numbers. This came, I think, from our NAR report. 87% of home buyers get a home mortgage. That's how they buy homes. They're not buying it with cash. What percentage is denied? 7% of Black and Hispanic home buyers are denied. 4% of white and 3% of Asians. Why? Low credit scores and the debt to income ratio. Things that can be changed. If a buyer knows today that he's not making enough money and that he needs to make X because his loan officers told him, he can go out, especially in this economy with all of these jobs, with openings and good paying jobs, go out, find another job and put yourself on path in a year or two, give the income up deliberately, because now you have a goal, you have a reason to. As the income increases, the denial rates drop. So that's important, and that has nothing to do with race. Many times people say, if you're Black or minority, you have a lower opportunity to get a home. If this is the reason why, we can overcome this. And this has nothing to do with race. This is something that happens across all races. And so here's an example that I like to use just to visualize it sometimes for our clients. So if you bought a property in 2022 for $100,000, in 5 years, your equity could jump up to $50,000. Sometimes you need to see that. People need to see it to know that that's real, that can happen. See it in black and white. And then if you keep it and rent it out. And so what we're going to talk about a little bit too is if your first home that you own, if you decide to move into another home, why not encourage our clients to keep that first home as a rental, as a retirement? Because if you look at it, if you rent it, let's say, for example, for $1,500 a month, that's $18,000 a year additional income that you're getting that can go towards your retirement or savings. And in 5 years, there's $90,000. So imagine you have 2, 3, 4 properties with these numbers. And so when clients are looking at that, they can then become intentional and say, oh, okay, I never thought about it that way. Because that's what happened with my husband and I. told this story yesterday. I had a real estate agent who was coming from being a teacher who has, they have pensions, they have benefits, they have all of that. We don't have that. Do we have benefits? No. Pensions? Nothing. We have nothing. So we create our something. And so her way of creating her retirement package was to purchase 10 properties that all rented for $600 a month. Over the years, while she's working, selling real estate, waiting to retire, by the time she's ready for retirement, those properties are paid off, the renters have paid them off. And now her income is going to be at least $6,000 a month because the amount's going to go up. So her 10 properties that rent for $600 a month, that was her goal. So her target was to buy those 10 properties. After hearing that, my husband and I said, okay, we need to be more specific and deliberate about how we buy properties and the number that we buy, how much we rent them for, and what the end goal was. And I mentioned earlier, he retired 4 years ago because we hit our goals. And so we want to be deliberate about building wealth, and this is how we do it. And we need our clients to see this visual so that they can understand that. Briefly, I'll touch on how do you protect your assets. Estate planning is such a huge deal. I mentioned it earlier. If you are not prepared to properly protect your assets and package them up to pass along to the next generation, you lose that opportunity. And so we went and visited with he was an attorney and a CPA all at once, and we sat down with him, showed him everything that we had, and he helped us put into a trust, a will, all kinds of stuff. We have kind of a multi-tiered estate plan because of our situation. So I would encourage you as real estate agents, let's go out and do this. Let's get our business in order. And then once yours is in order, we can tell our clients this is what you need to do to protect your property. The beneficiary deed, this is something that's real important. I'll share. In the city of Kansas City, we have so many, in some of our neighborhoods, so many properties sitting vacant. Those properties are vacant because the owners died and did not have a mechanism or a way to leave them for their future generations. So if they had children, their children couldn't claim the property because they died without a will. And many times they just walk away from it and they leave those houses sitting vacant in the community. Let's let our clients know, protect it. If nothing else, talk to a title company and an attorney about a beneficiary deed. When they purchase the home, that makes sure that it transfers to the next person after they're gone. That's so important. Make sure that they don't lose that property. And then of course you'll talk about your trust, and we hold a lot of our properties in LLCs to protect ourselves. And then property preservation, physically making sure they know about taking care of their property, and that, if there's a foundation issue, you take care of it. You have a roof issue, take care of it, because if the property is not well maintained, the value decreases. We need to talk to them about that as well. And then making sure you have the proper insurance in place to protect the property, and that you protect your investment. You have it insured properly, and perhaps having, sitting down with an insurance agent. What can we do? Homebuyer workshops. How do we teach people? Workshops, and you bring your lenders with you. You have the experts there to talk about it. That's the thing that's most complicated for most people in the transaction, is the loan. You have your experts with you there. And when people are getting married, instead of buying them the dishes and blenders, have them set up a way to receive money for down payment assistance. And I think either Scott or Caroline can talk about this. How do we properly get that money? So when you're asking for wedding gifts, you ask for money for a down payment for a home. When you're graduating from college, you ask for money for a down payment for your home. That we're intentional about making sure our clients know that this is an option for them, because that's a big deal, because people want to help them, and let's do it in home ownership. And they want to teach financial literacy, and we talked about the estate planning and protecting your home. Here are a couple of flyers of a couple of workshops that I've done in the past that were what I called home buyer wealth building workshops, where we had lenders. We had someone there talking about repairing your credit. And then what we offered, and we had the lenders talking about, each time I'm doing it, I always have a lender talking about down payment assistance, and it's always going to be at least $10,000 or more, because that gets people's attention. If you're doing a normal home buyer workshop and you say, hey, come and learn the ABCs of buying your home, people may or may not come. How many people do you normally get at home buyer workshops, if anyone does them? How many do you get to your workshop?
Like 2 in person and maybe 25 virtual.
25 virtual, 2 in person. How many people?
We have a state program that does it. You have to have a certificate to teach it, and ours average probably 8 to 10 people.
8 to 10 people, couple here and 25 here. How many? 30. Anybody else? Yes?
Sometimes about 39, 40 people.
Okay, very good. So those are good numbers. So those are people one day will be homeowners. This one on the right, we did that virtually and in person. I think, what was that, a couple years ago? We had 75 people register for that, because we were talking about $15,000 in down payment assistance. They showed up. The one on the left we just did last month or the month before, and we had 86 people register. Because we were talking about $10,000 in down payment assistance. We talked about building wealth. We talked about credit repair, all those things. It's a one-stop shop. You come here, and when you're done, you get to talk one-on-one with the experts. You get to sit down with them, make an appointment, because we know we need to grab them while they're there. So 70-something, 80-something people for these workshops, those people are going to turn into buyers. When we did we had a $15,000 down payment program years ago, Neighborhood Lift, and I saw that, and I went to churches and I talked about it, and I promoted a home buyer workshop. They have a certain number of grants in a certain period of time. You have to hurry up and get them under contract. I sold 12 or 13 homes during that time because of that promotion to people who otherwise would not have owned a home, because I'm promoting $15,000 down payment assistance. They don't see that anywhere. That's a big deal. So please use that and find your lenders with down payment assistance programs. And then here are some quotes that I like. Your focus creates your world. What you focus on is what you're going to get. If you're focused on creating wealth and building your own wealth, protecting your clients and yourself, then that's what you're going to get. Here's a quote from Gloria Steinem. I love this quote. Wealthy people plan for 3 generations. Poor people plan for Saturday night. And so my question to you is, what are you planning for? And so you heard me, and I have my 2 generations covered, so I'm all right there. And so I'd like to ask you all to do the same thing. And my final quote, I mentioned this earlier, the only way to get rid of poverty is to create wealth. Those who create the wealth get rid of the poverty. We don't need government programs. We don't need government to do anything for us. Owning a home, which is something we have control of, is something that we can do to help people get out of poverty. That's something within our power as real estate agents and community servants. And so on that note, I'm going to share book recommendations. And these are the books we remember from years ago. Millionaire Next Door. It's not who you think is the millionaire. It's someone that's walking around that looks just like you, that just has a little money in the bank or assets out there. You would never know. Think and Grow Rich, A Black Choice. Napoleon Hill started writing the book. He wrote the book Think and Grow Rich, profiling people who were wealthy. He died before he could finish the one that was geared towards black families. Dr. Dennis Kimbrough finished it. If you get a chance, YouTube these people. You should see on YouTube, listen to him. You'll be inspired. You will know that we don't need to focus on race all the time. It's not always about race, but that anything is possible. Dave Ramsey, anybody listen to him on the radio? Yes. Total, yes, debt-free. My husband listened to him too, and that motivated my husband to get stuff paid off. He wanted to one day be able to call in and make that debt-free scream, because that is the goal. Pay that debt off and live below your means. If you can't pay cash for it, you can't afford it. But he does give us an opportunity to use real estate to get loans. And then again, Dennis Kimbrough again, and Dr. Thomas Sowell, who is the one who was, no, he wasn't on the video. That's the quote that I used. So that is it for me. And we're going to talk to these wonderful lenders who have expertise in their areas. We're going to hear from Scott next. Yeah. And then we'll have an opportunity to ask questions, for you to ask questions before we finish. And if you have any information to share, that you can come to the microphone, because there's a wealth of information out here. You may have some tips that we want to share with others in the room.
Can we do a time check as far as where we are?
Yeah. Did I use too much time?
No, it's okay. I just need
26 minutes.
Okay.
About 30, 26. Okay, so I'm gonna stream through this because I want to give Carolina time to get through her slides, and then leave some time for questions.
Are you trying to say I took too much time?
I don't want to blow through these.
I got it.
So
Got it.
That's what they got. So okay. So again, Scott Willis. I'm going to talk a little bit about the Black and minority advantage, and as Stacey said, real estate as a generational wealth builder. So I'm going to get into a little bit of information about U.S. Bank. Is anybody, show of hands, is U.S. Bank operating in your market? Are you familiar with who we are? Mm-hmm. Okay. Yeah. So we're in about 26 states. So we're in about as many states as we're not in from a retail presence. So just foundationally, started in 1863. We have about 70,000 employees across the U.S. About 3,000 branches across these 26 states. We actually moved from west to east. Most banks move from east to west. We have mortgage loan officers in about 44 states. One of them is right here, Adrian Davis. Adrian, will you please raise your hand, let people know who you are. Thank you for coming. He's based here in Orlando, and we lend in all 50 states. So just because we don't have somebody there is not that we can't do a loan there. Okay, 2022, Ethisphere ranked us as one of the most ethical companies in 2022. When you talk about lending and providing services to communities of color and LMI, trust is critical. That's the issue right now. It's a huge trust gap between industry and community. And so we think that's very important, and we stand by that. Also ranked as having the best digital mortgage process. For those of you who are engaging your clients digitally or online, talk to Adrian or talk to me about some of the tools we have to support that if you're getting more clients into that space. And finally, we're continuing to move up the ladder, the Diversity Inc. number 17, up 1 year over year, top 50 list in 2022. I'm going to come back to that. I'm going to talk to that later. I want to get to the meat of it. So what are we doing to actually advance Black homeownership? We created a signature initiative called Access Home. And what we're trying to do is advance Black homeownership through not only increasing access to credit, but also equity for Black individuals and families. So what we've done in 2021, we launched a strategy that's built around 4 pillars. The 4 pillars are 1, enhanced financial education, 2, youth engagement, 3, strategic partnerships and community outreach, and 4, increased representation, which is a key component to reaching these communities. We've set these operations up in 5 pilot markets, which we call our test and learn markets, and they're really driven by two pieces. 1, markets where there's a significant gap between Black and white home ownership, and 2, markets that are among the most affordable for a purchaser to actually buy in. Okay, and we're also getting great support from 18 501c3 organizations, world-class partners that do the work that Stacey was talking about, education, training, financial literacy, and some other things too, creating some core disciplines within our buying community so they can purchase and actually elevate. And then we also are supported by some great national partners, Fannie Mae and Freddie Mac. We're very involved in the work that we're doing. Increased representation, development of mortgage professionals. That's one of the other things we're trying to do. How are we attracting the interests of traditionally underrepresented communities in mortgage? What we've done is created something called a mortgage MLO development program. So we've identified 10 to 15 individuals. They're what we call new to industry. And these folks have community connectedness, sales acumen, and a willingness to want to learn the business. So we're investing in these individuals for a 12-month cycle. 6 months is sort of technical operations training, the nuts and bolts of the business, and the rest of the 6 months is really focused on business development. How do I talk to, how do I meet a realtor, meet a builder? What are the tools I need to go to actually move the business?
So Scott, let me ask this. So you're saying deliberately that you're identifying, and there are other, I want you to find lenders in your market. If US Bank is not in your market, there are other lenders in your market that are very intentional about working with the communities that we're talking about serving today. So the things that you're hearing from Scott gives you some information to ask lenders in your marketplace if they're doing some of the same things. Exactly,
and this is a new to industry program from all that we know. And again, I think that's an element that we've got to call out. If I go work for Mike, who is my guy here at BofA, and then I go Bank of America, and I go work for Adrian at US Bank, I'm not changing anything. We're just robbing Peter to pay Paul. We're not increasing new talent, new industry opportunity for mortgage professionals. So by growing this new crop new pool of talent, we believe we can accelerate some things and really change representation in these communities. And we've also developed an appraisal apprenticeship program, which we've launched that in 5 markets. And what we're really trying to do is transform more diversity within this industry. I mean, it's all well known.
Do you mean with the appraisers?
Yes.
Okay.
Yes. My understanding, 97% of the industry is white, 70% of the industry is male. So that's not diverse, and it doesn't align with some of the work that needs to go on in these communities. So again, that's another aspect of our transformation that we're working on. And finally, on the expanding access to credit side, we're partnering with Fannie Mae to create a positive rental history feature in DU.
And this is a big deal.
Yeah,
This is a big deal. How many renters don't have credit and they think they don't have any other credit? And this is a big deal if you can, I guess, continue saying that.
Yeah, and I think I'm just going back to my notes here. I think what it's going to do is it's going to create an opportunity. How it works, it's going to be able to pick up on the bank statement whether the client has or does not have rental history. Mm-hmm. So if it does, it goes right into the credit decision. I don't know if rent is if it's always reported or reported in all situations. And we have some cases where people are actually paying rent, they don't have strong credit history, mm-hmm. but they have strong rental history.
Right.
That's what I'm trying to say.
Right.
And so this is a feature in DU that rolls that right into the credit decision. Now they have to self-disclose. The individual has to say they want to do it and raise their hand. But again, this is a game changer. We're executing with Fannie Mae and adding this positive rental history payment program. We think is going to accelerate opportunities for more buyers to actually purchase.
Mm-hmm. So a question to ask your lenders that you're working with, do they have this, especially for our renters? Yes.
Okay. I want to be respectful. Oh, Carolina's like, yeah, okay. First-time home buyers, American Dream is our signature program. It's available in 25 states. It's a 3% down program, lender paid MI, up to $10,000 in down payment and closing costs for either down payment, closing cost assistance, or escrow repairs. We also offer traditional down payment programs, Community Seconds, which we can use with Home Possible and Home Ready. There is an approval process for those programs, and we can layer financing with those second programs up to 105% TLTV. We also offer VA and FHA loans, including First Step, which provides a graduated payment option, although fully amped for the purchaser to be able to buy. And we're very active with the State Housing Finance Agency industry. I think we're a master servicer for probably 40 or 45 HFAs, and we're probably a retail lender with another 30. So if you don't know about us in that circle, we have some great products and programs to meet the needs of buyers full cycle.
And the thing that got me to you
Yes.
and excited about you is the fact that you told us some examples across the country where down payment assistance, how much down payment assistance can you share that some of these buyers are getting?
Yeah. So is anybody here from the DMV, from the DC area? Okay, so you guys are familiar with HMAP? Okay, does anybody know what the current amount of assistance that's available through HVAP right now?
Is
Through
that
the mayor's?
$2,000
How much?
money?
No, it's actually through the mayor's African American
Oh, that's
Homeownership
the
Initiative. Yeah, it's $200,000.
Down payment
Down payment assistance
assistance.
that can be used for a first-time home buyer.
Down payment assistance. So if they bought a $300,000 house, they're getting $200,000 in down payment
Up to $200,000
assistance.
in assistance.
Do you all hear that?
Yeah. So
Do you
the
hear that?
assistance
That-
programs are out here.
That's why he's sitting here today. We heard that about his
I
company.
gotta tell
That,
them $1,000 of that.
right, but that's a game changer. So we have to ask our lenders
Right.
what kind of down payment assistance programs you have, and you can layer on top of that $200,000. I was at a conference, a couple, $200,000. That was a conference not long ago where I heard of a person that bought a $200,000 home that got over $100,000 down payment assistance. Instant equity, and it's out there available. We just have to ask the questions.
Got it. And again, we also have the ability to expand family, second home, and wealth, to her point. You guys can reach out to Adrian for information on realtor tools to boost business. We have a robust co-marketing site for you agents that are actually interested in working with us. And again, I'm around. There's much more detail around our 4 pillars if you want to hear it. And now I'm going to hand it back over to Stacey.
Who was going to hand it over to Caroline. And so this is for the first-time home buyer. Let's get them into that first home. And once they're in that home, they have their foundation set, and it's time for them to move up. This lady right here is going to tell you, and then you'll hear why she's here today. So please share the magic.
Thank you, Stacey. Thank you, Scott, for giving me some time to.
You're so generous.
So again, the reality is that right now, you guys know that we're navigating one of the most uncertain markets in the last 40 years, right? One of the things that you were talking about, Dave Ramsey, one of the things that I've been seeing on TikTok and social media, you guys see in the background, his voice saying that right now is the best time to buy a home, right? I'm sure everyone has heard that. So, and I agree with that, right? I think that it's all about education and aligning with a lender or various lenders to find the resources and the specific products that no matter what stage in the home buying journey your clients are in, there is a specific product. And in this market, flexibility, right? So one of the things that I want to talk about is New American Funding this year actually announced a 5-year rate reduction pledge, where basically what we do is if you guys lock into a loan right now, we will waive in the next 5 years all lender fees, appraisal fees, so that you guys make sure that when the rates go down, you guys can refinance, right?
That's wonderful.
So we will waive all of those fees. One of the other things that I'm probably sure that you guys have heard, from other lenders is the buy downs, right? Buy downs is what people are talking about right now. Make sure that you guys ask your lenders about, what is the buy down programs that you have on your loans. Well, New American Funding actually has, they have lender paid buy downs and we have seller paid buy downs, right? So the lender paid, which basically means that New American Funding will cover this, we have 3 different ones, right? We have a 1-0 buy down, where basically during the first 12 months of home ownership, we will buy the rate down by 1 point, right? To make sure that, clients and home buyers can ease into home ownership, keep some money in their pockets, and, reduce that stress of the new homeowner finances. We also have like a 1-1-1, which is basically during the first 3 years of home ownership, we'll waive, 1 point out of that, out of your rate. We also have a 2-1 buy down. Again, during the first 2 years of home ownership, the first year we will decrease the rate by 2 points, and then the second year by 1 point.
So can you give us an example? So today, like if rates, I saw where this time last year they were 3%, now they're 7% or so. So are you saying if someone used this program and bought a home today, their rate would be?
They would be able to basically do a 2-1 buy down, which for example means that during the first year, instead of being an 8%, it would be a 6%. During the first 12 months, the second 12 months, it would be down by 1%.
So that's a game changer. Isn't that important?
Correct.
Instead of going in at that higher, because we know we lose people when the rates go up.
Correct, and those are lender paid. So basically means that it's not covered by the buyer. But then we also have the 3-2-1 buy down program. One of the things that I see, one of the trends that I see in most of the country is that sellers are willing to give concessions, right? So what you can do with those concessions is, again, we can use them for the closing costs, but the other piece that we can do is we can cut the rate drastically by 3 points. So basically, if your interest rate is at 8%, it would be a 5% during the first year. It would be at 6% during the second year, and at 7% during the third year, right? And then you can. That's the beauty of making sure that everybody goes in. Don't let interest rates deter your clients from home ownership. This is the perfect time to buy. Right now, the inventory is opening up a little bit, and so I think that's the programs, and it's all about the education, like knowing what's available out there, right? So, and a lot of the lenders have these buy downs. It's just making sure that you guys find out. And then the other piece that I wanted to talk about.
And this gives buyers an advantage. If everybody else out there knows the rates are 8%, some buyers are sitting on the sidelines. Our buyers can be with the 3-1 buy down. They can be in at 5%.
Correct.
And so our buyers, because the agent identified a tool, could be in the marketplace at a lower rate than others. So that's something else with the value that we bring.
Correct.
Okay.
That's exactly it. And then when the rates go down, you can refi. So I mean, it's all about finding out what are the resources and programs that lenders have.
Right.
One of the other things that to me I think is definitely a game changer, and I'm very proud of this program because I stood it up. So it's basically our cash buying program. So
listen to this, guys. Listen to this.
This is a good one. So basically, it's all about the cost savings, right? That's what we always think about. Hey, how can we create cost savings for our clients? And again, like you were mentioning, institutional investors. You guys have. I'm sure that everyone has experienced this. They are buying up all the inventory and basically converting these properties in urban and suburban areas, single-family homes, into pricey rentals, right?
With cash offers.
Exactly. They come in cash. And so what happens is rentals keep going up, and homeowners who want to stay in home buyers who want to stay in the community, that want to buy in the community, they're not able to, right? So one of the things that we did is we created a brilliant solution, and it is our cash buying program, Buyer Accepted, where basically what we do is, we get our borrowers pre-approved, underwritten, approved, and then what they do is they go with their realtors, they identify a home that they want to purchase, and then what we come in is we are able to convert these home buyers. Today we're able to convert a home buyer, a first-time homeowner, home buyer, 3% down, 620 credit score, into a cash buyer.
Do you hear that? Do you hear that?
Yeah.
So tell us how, and tell us more how. And so when it's time, and for us as agents, we're always looking for that thing that puts our client at an advantage. So a competitive advantage with the agent that knows about this program when we're out there competing with these cash buyers. And it works. I mean, kind of walk us through that a little bit, because that's a big deal.
Okay, so basically the client gets underwritten approved, right? And then you go with your realtor, you identify a home that you want to put an offer on, and basically what we come in, we put in a cash offer, right? The offer gets accepted. Most of the times, especially in a market like today, it used to be, the multiple offer situation, and everybody's like, oh, cash buying programs are great. Why is it relevant more now than ever? Well, it's basically because we're seeing that sellers, when they know that you're going to purchase a home in cash and they're going to have their money 7 days, after making an offer in the bank, these guys are willing to basically lower the price of that home, right? So we come in, we submit a cash offer, we purchase the home in cash, and then what we do is we turn it around and we sell it to your client with whatever financing they are approved with.
Is that interesting? Is that interesting?
Yeah.
That's just, to me, fascinating and a game changer too.
Correct.
And what does it cost them? Does our buyer have to pay more for participating in this program?
So one of the things, the rates are the same.
Okay.
That doesn't change. What there's a small convenience fee of like 1.5, and it depends on what states, right? Because there are certain states that have transfer taxes, right? Where we have to take into account that the different costs. So what happens is we come in, we purchase a home in cash, and then we have to take insurance on all the homes that we purchase. But the beauty of it is that if your client has a departing residence, what they can do is the minute that we purchase that home in cash, they can come in, move in, right? And then they can sell their departing residence.
So you guys call it departing residence, and we just call it their
Yeah.
previous home or resale.
exactly.
Yeah, so
Correct.
their home,
And we
okay.
know that homes right now are taking a little bit longer to sell.
In some markets, yes.
Exactly. So basically what you're doing is you're submitting an offer without a contingency of a departing residence that you have to sell, right? Your client moves into the home and then they can basically stage the home. They don't have to spend any money in hotels, storage, none of that. They move into their dream home and then they have whatever time, 3 months, 6 months to sell the departing residence.
So this is why she's here today. New information. So imagine the seller, when you're working with a seller and they have to choose between offers, more often than not, they want to choose the cute little couple that, you know, the little dog and the little kids that wrote that letter and sent it on. They want to choose that. But if you have a cash buyer, I don't care if they're an institutional investor, the seller's looking out for what's best for them, rightfully so. You have a cash buyer that may be institutional, and you have an FHA buyer and a conventional buyer, you're going to choose the cash. In this particular situation, this could equal the playing field, and if they want to choose a real buyer, the cute little couple, now they can, and that couple can compete with the cash buyer.
Absolutely.
Game changer.
Absolutely. Exactly. And again, like I was saying, it's all about the cost savings, right? And I always give this example, but this one was like, I think it's probably like the most impactful for me. We had a buyer in New Jersey that we offered $40,000 under asking price. The seller was, of course, he took it because he had his money 7 days after, in the bank. So
Good.
the other beauty of it is that for you as realtors, you guys are going to get your full commission, 7 to 10 days, after the offer has been accepted. So basically what that does is it creates, more transaction for you guys. So to give you a couple of data points on this program, one of the important things is that you have to be certified, right? It's like a 40-minute presentation where we take you through the different milestones of the program. But basically, as of today, we've certified over 10,000 agents. Important, Buyer Accepted is the only cash buying program available nationwide. We've closed over 1,200 transactions in 44 states across the country. And I always talk to Scott because he's actually one of my mentors. I always run things by him because he has a brilliant mind. But he always tells me, he's like, talk about the product mix, like how much, what is the product mix? And I would say that, probably 65% is basically conventional. We have a few jumbo, but the beauty of it and what I'm really proud of is that we're actually able to help a lot of VA buyers, right? So basically these guys are, bringing zero down and sometimes, sellers are a little bit, careful because it has a different appraisal, different rules, right? So we are actually doing helping a lot of VA buyers with this program. So
Are you ready to take questions?
yeah, of course.
Okay, so we have a few minutes for questions. There's a microphone here, there's one over there. We have just a few minutes, so please come to the microphone and answer your questions. And so I wanted, both of these people traveled to get here. They went through all kinds of things. We were originally scheduled to be here Friday, and then we had some travel issues, and they were kind enough to adjust their schedules to come from Atlanta and the DC area to be here with us today. So I'm forever grateful to you all for these special, the products that you have or the things that are game changers that will help us position our clients to buy homes. Go ahead.
First of all, thank you guys so much for being here. This information has been so helpful. The Buyer Accepted program is something that's kind of a little intriguing to me. I am in Alabama, lower Alabama, Delta, the Wiregrass area. I've had several loans closed with your institution, but my question is, with this program, I see you says there's no contingencies, but what happens if the house that they're selling, that they're leaving, is not sold within the time span that you're allowing them to sell it in? And then what if the house that they're buying does not meet the appraised value in which they're paying cash for?
Exactly.
Where does that leave that buyer?
Great question.
Exactly, that's a great question. So basically what happens is, during the minute that we submit an offer for you, what we do, and that offer gets accepted, we pull a desktop appraisal. We put an appraisal of the property. And then when I say contingencies, you have to understand, when we purchase that home in cash, that offer is whatever your client wants. So if they, for example, want to do an inspection on all of those contingencies have to be on the first contract. We'll do the inspection. But the important thing is that we do an appraisal to make sure that you're not going to have problems on the second piece when you're doing your financing. Let's just say that it doesn't appraise, because we have to do our due diligence for our clients, right? So if they know that they're going to, they're putting a $450,000 offer in a home that, is valued at 400, they have to make sure that they are able to cover that difference, right? So that's the important piece. And again, if they want to do an inspection, all of those things that the client wants to do, those contingencies have to be in the first contract, right?
And then
I think you had another question.
And then what we'll do is, does somebody else have a question? Because we're getting towards the end of our time. I think you may have one there too. And then keeping in mind, you can come talk to these brilliant people once we're done in more detail if you'd like. Okay, I think he has a question there because I think at our last question here.
Yes, good morning.
Good morning.
I'm in San Francisco, so we have a completely different market than most in the country. Is the 1.5, I have a couple questions. Is the 1.5 convenience fee stacked into the mortgage or paid
Correct.
upfront in the
No.
closing cost? Okay.
You can roll it into the loan. And I have to double check whether, I think it's actually 1.6 for your state, but it is rolled into the loan. They don't have to bring the money up front.
Okay.
Are the requirements FHA type requirements in terms of, in California, if you have an FHA loan, occasionally you have to get Section 1 done? So are any of those issues a part of it?
May I ask, since that's a very specific question, that you talk to her about that
Okay.
at the stage here?
All
And
the
then,
slides
Yes,
are
of
available
course.
at the end?
I'm sorry?
All the slides are available?
Yeah, 'cause we had a QR code that they could scan so that we could send them the slides.
We'll get that on the screen, the QR code for you. Yes. And then the question here.
Super simple.
Okay.
Do either of you guys work in the U.S. Virgin Islands? Have you considered working in the U.S. Virgin Islands?
Wow.
Drop it
It
off.
doesn't mean no. That means I need to talk with my credit risk person about whether we land in the Virgin Islands, whether to do business there. So I can check on
How do we
that.
get the slide back up? Because one of our slides has a QR code. Yeah, no, not the video. The slides, because one of the slides has a QR code where they can get our information. Or if we can get my slide. Is it working?
801, so you guys
It's
can
not-
come in and come visit and talk to me, and I'll give you guys more details.
I'm going to go to my last slide that has our phone numbers on it too.
Certified.
And so I think we have to wrap up. They're telling us we have to stop. So please come up and talk to them. So I want to thank you all for being here today. Did you learn something new today that you didn't know before? Was it helpful? Was it helpful? All right. Thank you all for being here today, for taking the time. Let's change some lives and create some wealthy people and some millionaires amongst ourselves and our clients, please. Thank you, guys. And thank you all.
Thank you. Good job.
Okay. Let me get the last. Let me get this slide up. For now, I want to put up, I think at the very end, it's going to be our contact, right here, if you can give me that one. I'll take that one for now. No, that has the contact information. Hey.
Hi, nice to meet you.